Now, the market's gained quite modestly, about 9 points. It's been weighed down heavily by a depreciating shilling. But what boosted sentiment today?
Well, basically, the market, though, hasn't moved much today. It's just flat. 9 points really isn't much for a 4,000 level. So at least we are not moving downwards. That's the sign of relief on the market. Not too much activity. Remember, all eyes are on the currency market and on the debt market. So even with the traders on the equity market, it's really just the usual suspects, the Safaricom, the KCB, that really are having huge volumes moving.
All right, high dollar demand obviously putting a lot of pressure on the shilling. It's breached the 91 shillings 45 mark. It's at 91 shillings 65 right now as we speak. So it's getting even weaker than what we saw in the sessions trade. The CBK's been in the market, but it doesn't seem to be working. What options are available?
Well, the options really on the table for CBK to be much more aggressive in the moves that they are taking to mop up the currency, the shilling. So unfortunately, there's been a lot of rhetoric and not enough action on the CBK front. And that really is the concern, that why we are having the shilling just continuing on a downward slide with a bonfire of the shilling, we call it here.
I mean, obviously, the CBK has started to blame speculators, even calling for an audit of currency traders. Do you think speculators are to blame?
Actually, I don't think speculation is to blame on this. We have very few speculators, or very few people in capacity to actually speculate, and B, the fundamentals of the shilling are really wanting. What came out today is that the inflation on last month was shot up again by just about 1% to stand up 12.95%. So when you look at it from all angles, really the shilling and the Kenyan economy are not at a particularly good footing, and these are the issues that really are at the fore. So putting some pressure on currency traders or on the market participants, I don't think that's the best route to take.
All right, we are getting news that on a positive note, though, the bond market's doing fairly well. We've seen an injection of over 20 billion Kenyan shillings into the market. All these issues of higher interest rates pushing commercial banks into government securities. Are bonds what investors should be looking into at the moment?
Well, for a long time, the eyes on the currency, sorry, on the quoted equity securities. A lot of commentators have spoken about a lot of risk issues, the politics and so on. But looking at it from the aspect of the debt, not too much has been spoken about that. So the gradual shift into the debt market has been ongoing for the smart money, though it's not particularly looking very enticing right now for those who have been accumulating their books. Remember, at the beginning of the year, the 91-day T-bill was about 2%. Now we're talking about 9%.
Right.
So we have to consider exactly what kind of moves you are taking into the debt market. You have to really consider the yield curve and really how to position yourself in an environment of rising interest rates.
Let's go back to the equities and look at some of the top gainers today. ARM was a top trader, moving about 70 million shillings. But, you know, there are concerns that this is a fairly illiquid stock and that the price may be impacted by some of these block trades. Your view?
Yes, ARM, though, is not particularly liquid, but the fundamental of the stocks are really good. And though we see a lot of increased competition in the mining subsector, ARM really for a long time has been head and shoulders above the competitors. So ARM, I think for the longer term, for those with the ability to get it in there and really hold on to that stock, I think the fundamentals for ARM are particularly good, though the aspect of liquidity really needs to be addressed, as it is with many stocks on the Kenyan market.